Well, good afternoon and welcome. Welcome to another of our Webinar Wednesdays, number 5 in our series of managing your business through the pandemic. Well, good afternoon. I'm Kelly Bearden. I am the director of the CSU Bakersfield Small Business Development Center, or SBDC. And we're going to be here every Wednesday for quite a while. So this is going to be a lingering effect, it looks like. So we'll be here every Wednesday with as current of information as we can possibly find on funding opportunities and everything to get your business back going again solid. So I'm going to go through a lot of information today. So I don't have a guest speaker today, which will be back, I hope, next week with some guest speakers and a lot to share. So a little bit about the SBDC program. The SBDC program is actually a program that's in all 50 states, 1,000 of us centers around the country. We're part of the Central California region, and the Central California region has 5 centers. We're in the center in downtown Bakersfield and cover all of Kern, Inyo, and Mono counties. Then we have a center at Clovis College up in the Fresno area that covers 4 counties in Central California. 2 counties are covered by the UC Merced regional alphas, and that includes Merced and Mariposa counties. Farther north in Modesto, Stanislaus and Tuolumne County are covered by the Valley Sierra SBDC, and along the coast we have a couple of centers in Salinas covering San Benito and Monterey counties, and also down in San Luis Obispo County hosted by Cal Poly. So please look us up. We're open, we're available, we're working with businesses, trying to get them up and going again. We have consultants that can help you with training opportunities. We have resources. So look in those particular areas. Like I mentioned, we'll be back next week. So we'll see you next week. And the topic will be whatever is news on that Wednesday. So a little bit about how we can actually work with you and help you with disaster relief. As you've noticed over the last several weeks, we've been working with you on trying to get make a little bit of sense out of the SBA, EIDL, and PPP and other loan programs. We'll continue to do that as we wade our way through the process, and we'll start moving on toward maximizing your business for when you do your restart. Or maybe it's not a complete restart, it's just a start up, more or less, from limited operations. We're going to continue to look at a lot of things that are really key in managing your business, like cash flow and working on building sales and marketing ideas and social media assistance, which we all have capable consultants that can work with you on those particular tasks. We'll evaluate other funding opportunities for your business. And we'll also look at some of the other topics that we're not covering so deeply, such as HR, and evaluate some of the opportunities and as we get you to adapt toward actually growing your particular business. So what's new today? Today, April 15th, I hope everybody out there, or at least most of you, are, if you haven't filed already, your 2019 US or state income taxes, that you're enjoying your 90-day reprieve. Please recall that they are now due, I believe, on July 15th, 2020. So unless you're self-employed and you're wanting to do a PPP application, and I'll mention this twice, so I'll mention it now and again later, this is going to be part of the process to where you don't necessarily need to file that 2019 tax return, but you need to have it complete for your Schedule C if you are a self-employed individual who now is able to file a PPP application. What also happened this week and is new is farmers and some of the ag businesses that we see throughout the San Joaquin Valley and Central Coast are now eligible. And USDA announces new programs, and hopefully we'll be able to get USDA involved in a future webcast. We have a great relationship with USDA and Dan Johnson in the southern part of the valley. And hopefully we'll be able to learn more about USDA and some of the programs in their rural areas, in addition to the ones for farmers and other programs. And of course, EIDL and PPP have only been around a few weeks, but we have a lot more changes and a lot of things that are happening rapidly in those particular areas. So just a recap of things that we've done in the past webinar Wednesdays, and it's a good opportunity. You can go back and view any of those recordings, but our focus has been almost entirely on the emergency funding of small businesses and the closures that we've had in California since March 19th and how that has affected most businesses, particularly small businesses in our region. So we'll continue to talk a little bit about EIDL and PPP, and we've talked about deferring expenses and other things that are crucial, and focus on cash flow and to adapt and always look for the opportunities. So a few acronyms before we get going today, and I'm trying to change this up a little bit because acronyms are so much fun. EIDL, of course, is the Economic Injury Disaster Loan Program. That is the one that you file with SBA. So filing that one with SBA directly, it's a direct loan from them. The PPP, or the 3P as I prefer to call it, is the Payroll Protection Program that actually became law in late March and has been working through a lot of the interim final rules, of which we're still waiting for some, but we'll have some shortly and go from there. CF is of course my favorite topic, cash flow. UI, we'll get into that, and also variations of UI, which is unemployment insurance. BPA, which you'll see my CSUB BPA shirt I'm wearing today, is an acronym for the School of Business and Public Administration, one of the 4 schools at CSUB. And it doesn't have anything to do with BPA free, which you read on the bottom of your plastic containers that are apparently safer to drink out of than other plastic containers. Now, I know BPA free would be a real popular addition to our students' vocabulary if they didn't have to pay for tuition. So it is BPA, and you know a little bit about the SBDC acronym by now. So what we're going to focus on today is the latest on our 2 programs, EIDL and PPP, and they are evolving and continuing to give us new guidance and new information and new changes of what we think happened last week, maybe didn't happen. So we're also going to get into, for the first time, in depth on PPP for self-employed and for independent contractors. And please note that self-employed and independent contractors can file for PPP, even though it is a payroll-based program, and we'll get into that. Talked about cash flow, but also budgeting for home and business. It's one thing to try to manage resources and revenues that are lower, but it's much more difficult when you start looking at the household and the business budgets that really are going to need a lot of attention. Take some assumptions on the direction your business is going. We're all in this as kind of an amateur freelance forecaster of what's going to happen in the future, when our businesses are going to get opened and what's going to happen. And you need to make some assumptions on what is going to happen at maybe various levels in order to best guide your business and get your business up and going and survive this really mess. We're going to look a little bit later on what the big guys are doing. And because, this isn't only a small business problem, even though it seems that way. Big businesses are adversely affected. Of course, they have additional resources and more tools, and their sheer size gives them more guidance and more ability to recover. But what the big guys are doing, I think, is a good testimonial on what things are happening. We might discuss your employees, and always we're wanting to know your questions and concerns. So on that note, do ask questions in the question box today. I will try to get to as many as we can afterwards. And we'll continue to kind of peruse that Q&A box at the top. We will have a survey that is launched, and we will make available a recording and any of the handouts that we're able to pull up today. I was having a little problem earlier getting my Excel sheets to actually recognize on sharing that, so we might have a little bit of an issue there. But before we get into the meat and the potatoes of the program today, what I'd like to do is launch a few polls. First question is going to be regarding EIDL. You see the acronym right behind you. So let's launch this poll, and the question is, and these are for people that are eligible to apply for EIDL. It's going to be, have you applied for an EIDL loan? And yes, did you apply once? Yes, did you apply twice? Because there was a period of time when many individuals that applied early were asked to reapply. You have not, if it's not yet, then you're still looking to apply, which there's still plenty of time. I don't know about plenty of money, but there's plenty of time. And no, you're not going to apply. So voted up, got about 44% voted so far. And the yeses are in the majority, particularly those that only actually applied one time. A few of you two-timers, some not yets, and we're ready to about close the poll. Let's close this and let me share the results with everybody. We're looking at now, probably about 45% of you have applied. So really, I've been watching this statistic as we've gone up, and it has gone up measurably since we started taking this poll a few weeks back. 27% of you, interestingly, may not have employees. And so you're looking at the independent contractor, sole proprietorship aspect of PPP today. So thank you for participating in that particular poll. And let's do another, why not? And let's do this one with PPP. And let me launch this poll. Did you apply for PPP? A simple yes, no, or I plan to is good enough for me today. Simple yes, no, or I plan to. We're already up to 40% of you have voted. The yeses are carrying the load today. Between yes and I plan to, it's running about over 3/4 now. So let's end this poll, and last chance to get in. There you go. And here are the results. How many out there of you have already applied for PPP? That would be 50%. And how many of you plan to is another 25%, and don't anticipate applying is about another 25%. So thank you for participating. And I do have a follow-up poll question that I'm going to launch. And that one is going to be related to those of you that answered yes. So now what I'm going to do is launch a poll to find out how much, because remember in EIDL, you can't select how much money you are actually applying for. You are going to be told that by the SBA. But for PP&P, when you approach your bank, you can ask for how much money. And is that going to be less than 50, between 50 and 150,000, 150 to 350, and then a couple larger amounts, the 350 to $1 million and over $1 million. So voted up, and got 36% of you in right now. So let's give you a last shot at that. And in the poll, we're going to find that the lower amounts are the ones that individuals on this call are all actually wanting to know. And so let's share the results there. About half of you are 50,000 and under. And remember these numbers when we start looking at, in a few moments, some of the loans that have already came in and where they're coming in for in the amount, and some of the examples that we have with PP&P. So 50,000, under 50,000, 50%, about a quarter of you between 50 and 150. So 3/4 of you are 150 and under, 15% the 350. And then 10% of you are in that larger, and one is going for the Whopper size, as we like to say. So thank you for voting, and thank you for participating in those polls. And why not one more? Well, I've always wanted to do a whimsical type question. And so here it is. You know, being in the South County, and Merle Haggard's influence beyond the Sandwalking Valley, had a song played at Woodstock. I don't know if everybody knows that. So he had a song played at Woodstock, and what artist covered a Merle tune at the iconic festival? Your choice is Country Joe and the Fish, Janis Joplin, Grateful Dead, Willie Nelson, or The Who. So get in early, get in often. I think I might be getting you. And those of you that are going to Google, I'm going to be watching the percentages. And if the one that actually wins or actually happens starts going up dramatically, I'm going to think you met Mr. Google on this question. But I'm going to give you another 5 seconds to get in, just because I'm enjoying this question, because it's something that's not EIDL or PPP. I'm going to end the results right now. When I get 50% in, we've got 50% of you. End and share. And you know, Janice Joplin, 36%. Pretty good number there. Number 2 is Willie Nelson at 26%. I know the other 4 were at Woodstock. I don't think Willie was there, so I don't think that was it. And I could be wrong on my question because I pulled it up out of the blue, but the actual correct response that I have is actually the Grateful Dead. 14% of you got that correct, covering a Merle Haggard song called Mama Tried, of which they played, I guess, several hundred times throughout their career. So anyway, a little fun for a change, and now it's on to work. Thank you for participating. Those of you from the South Valley that got that wrong, you know, and who knows, maybe Janis Joplin covered a Merle song there too that I'm not aware of. So anyway, let's move on to some of the changes that are happening with EIDL and with the Economic Injury Disaster Loan. So we know EIDL, and last week with our guest Keith Bryce, we talked about EIDL was coming in, and we were seeing a lot, at least 3 or 4 that day or earlier, of where they were coming in around the $15,000 level. And we learned actually later last week and Thursday that $10,000 advance was tied to jobs. So as of yesterday, we heard that large EIDLs are now being processed. There was some concern and some discussion on if it was only going to be a 15,000 and less program. There was really not any mention until middle part of last week about EIDL advance being actually tied to the number of jobs. And that is actually 1,000 job per job, $1,000 per job. So that was as of last week, and that was as of January 31st on your payroll. I don't know if that's still the case, but we did see a couple of $500,000 EIDL loans that were approved throughout the valley, throughout the San Joaquin Valley this last couple of days. So we have seen some movement on that area, and there have been press releases put out saying that they are going to do larger EIDL loans, because there was a big concern, because I've heard from a lot of you, including an email from Frustrated, who had mentioned that his 7,400 wasn't going to be enough for the size of his business. So hopefully there's some movement there, and we'll have more to report soon. So EIDL is actually looking at larger injury loans up to the $2 million maximum, I would assume, and there'll be more on funding and likely more funding for that particular program in the next round of stimulus. You need to expect 14 to 21 days for contact and approval status. And this was as of late last week. We heard that, and it was kind of holding true on what a lot of the requests that we saw in. And we're starting to see a lot of EIDL requests come in for our clients, and we'll share more of that with you next week. So 14 to 21 days is pretty much the magic time as far as contact and approval status from SBA, of which is usually sent in an email. One thing also, I'm getting some requests for people that actually are concerned about their status. They were perhaps maybe the individuals that got in early. And you remember, if you got in early, we used the historic SBA disaster loan process, which is really, as I've said, tied to and really made for a disaster of a status like an earthquake, a tornado, a physical damage earthquake or damage. So the economic injury was different than that. And then after the CARES Act was passed and signed into law, it changed the direction of where this was going. So the funding kind of dictates to SBA where the money is and where it goes to. And so those decisions are being made at a higher level. So, but if you need a status update, I do have a contact, and please, I only use this on very limited occasions, but I can email an individual at the disaster unit and he can give you an update. Right now, I'm limited it to people that have had 2 applications filed, and of those 2 that are filed, they haven't really heard anything back. So what I need is 2 application numbers in an email, and I can actually send it on and we can get you an updated status on that. So So do that. Next week, we'll look at other ones that are not 2 days related, but I think that there's enough, and I don't really want to bombard the individual who was kind enough to do this for us. So the last info we had was EIDL was going to have a relaxed underwriting criteria. Credit scoring was said to be in the 650, 680 range, and that was going to be relaxed. We're just not really getting a lot of information out on exactly what is the criteria. All we can do is judge from what we see and hear from our elected officials, from our SBA officials, and then also the information that we receive from them and other sources. So remember though, in EIDL that the condition for credit is that it's not available elsewhere. So if you could see a denial letter if you have sufficient cash reserves and resources according to the SBA. And if you do, I applaud you. I applaud you for that. I just would say that maybe EIDL won't work for you because of not having credit available or funding elsewhere. And also, we continue to work with clients. So our SBDC advisors throughout the Central Coast, San Joaquin Valley, and Eastern Sierra will work with you on trying to find and assist you in these particular areas. So that's our EIDL update for today. Paycheck Protection Program, PPP, 3P. This is just a one sheet. You've seen this before, and those are just the basic parameters, extraordinarily basic. If you're seeing those for the first time, I doubt it. So let's move on and have more of a discussion on what we're seeing as far as lender status and some of the recent information we're getting on the program. So a number of you, I think from our discussion last week, actually, I got a lot of positive feedback that you were able to find some lenders. We're hearing a lot from our sole props and our independent contractors in the last few days since it's opened up as of last Friday, April 10th, that they're having a hard time. And my guess would be, and I'm only speculating, but from some of the discussions I've heard, I know lenders are still working on their list of people that they're trying to get through. And they're working with businesses that they have their relationship with. And if you have a relationship with your lender, that's great. Continue with that relationship and work toward getting, hopefully, your PPP through. But a lot of sole props who have very minimal banking experiences, meaning that maybe you don't have the safe deposit box, you don't have the merchant account, you don't have multiple accounts, you don't have the payroll account, you don't have a lot of things that maybe generate a lot of fees for the bank. And, you know, let's be honest here, banks are just like your business and my business too, whereas, you know, our best customers oftentimes get preferential treatment. It's the way it goes. And their best customers are going to be those that make them the most money, just like our small businesses. So realize that and realize that going in. You know, I'm not going to say it's the 80-20 rule, but, you know, that 80-20 rule works for about everything. So if you're having a problem getting funding and you're still looking to get more funding, then there's opportunities. You know, locally last week, when I had Keith Bryce on, we talked about some of the banks in the Bakersfield community that were making loans, and we've heard some success stories out of that. Valley Strong Credit Union was one. Mission Bank, I believe, was working on their customers, but potentially could go somewhere else. Some of the other banks, Mechanics Bank, had some good records in turning around some of their existing clients. We heard a wonderful story about a client who actually, from filing to funding, was less than 1 week, about 6 days. So there's great stories going up out there. Valley Republic Bank is up. And so there's a lot of great stories that are happening. And, you know, it's just that if you're banking with a big bank and potentially you don't have the relationship in order to bank with them, you know, look in your community, wherever that might be. I know in Monterey County, there were a number of smaller banks that were doing deals as well. So look in your community first at your community banks and your credit unions and see if something's happening there. One thing that we've kind of stayed away from, and they're just now getting up to speed, is that a number of the fintechs are coming online now. And for your sole proprietors and your smaller businesses that are having problems locating a bank, look into some of your financial technology companies. Now, honestly, those are ones, the fintechs have had they've served a niche in the market, but it is for quick money. It is for very high APRs. If you look at the APR rate on that, the annual percentage rate, and that also is a quick payback, which makes it difficult for cash flow. So in most situations, we've always encouraged our clients to look elsewhere, particularly with the banking relationship that they have. But fintechs right now are opening up the PPP program. There have been some like Lendio that has been going for quite a while. We received information that Cabbage was going and then they had shut off. PayPal is either going or should be going soon. Square, if you use the Square chip, if you use their credit card processing, they would probably be likely. And let's throw the fintechs in with the other lenders and how we value our own small business customers, is that fintechs are going to also look at those that they have the relationship with. If you use Square for credit card processing, then they're more likely to put you on a prioritized list. We heard Intuit was doing some potential fintech PPP deals. And it was for those, I think they identified that as a subset of their QuickBooks Online customers. So not exactly knowing what exactly that means, I'm throwing it out there. Maybe that fits your need and you're looking for a bank. So there's a lot of fintech lenders. And I think the other key that I heard this week also is that a lot of the final regulations are going to make it easier for lenders to get these loans off of their books. And really the profitability side on this for lenders is not the 1% interest rate, it's the fees that they can generate. And if they can move these off their books, it makes them more likely and more compelled to do more of these type of loans. So we continue to target and track and look at lenders on a regional SBDC basis. We have a database we've been putting together and updating it. So if you have a question, I would first of all pursue a lot of the areas that we discussed there, starting with your local community banks and working down your existing bank first, your local community banks and credit unions and fintechs. Best advice I can give you right now on that is that it evolves and changes all the time. So do the banks and some of the people on that list. Really one of the nice things that came out, I first heard it on Congressman Kevin McCarthy's call on Monday afternoon when he had mentioned some of the statistics with the Paycheck Protection Program. And then by the end of that day, they sent out a report from the SBA kind of chronologizing and kind of identifying where these are being made, the size, and a lot of statistics. So right now we have a lot of statistics that are out, and this is through Monday evening. And we're seeing that, and that's basically about a 10-day period of time, not 10 working day, 10-day time from when the final regulations came out on this program. And there's been over 1 million loans that have actually been done. Gross dollars are about 247 billion. The lender count, number of lenders that are involved with SBA on these programs around the country and American territories is 4664. So here's some of the states and some of the territories. I'll let you look through and let you find that, California is there with 20 billion, but Texas got 21. And the unique thing about this is that when I compare the two states, you'll see that California's approved loans are less, 54,009 compared to 88,000 for Texas. And just kind of doing a quick math right here on the fly, it looks like the average size deal in California is going about $400,000. So if you go back to when you participated in the poll, 3/4 of ours were 350 and under. Yet the average deal in California has been about 400,000. And for Texas, if you look at that, it's less. It's around, it looks to be somewhere, it looks maybe in the 250 range. So smaller in Texas, and I think the deals flow are going to go down. We looked at the average deal size of about 240,000, and I believe that's continuing to fall. So of those loans, here's the loan size of the PPPs that have been approved and ready to fund. We're getting a lot of individuals that are coming in and asking questions about some of the final rules and regulations, which I hope is going to be the main part of our webinar next week, so we can understand fully and legitimately the granting provisions of the PPP loans. But before we get the cart before the horse, if you look at the number of loans, 70,000 of them have been 150 and under. So small businesses are getting in. And you'll see that by looking at the loans, the aggregate pool loan sizes that have been approved in this column right here. If we go from 150 and under to 1 million, we're looking at pretty close to 1 million loans there. And we're looking at 1 million to potentially greater than 5 million. Over here, we're looking at about 150,000, or excuse me, from 1 million down about 50,000. So that's interesting. We have 1 million loans that are 1 million and under, more or less. And we have 50,000 loans that are 1 million to 10 million. And yet they both consume about half of the overall total. We look at this total, it's about 95% in this particular area. So we're looking at about half of each being consumed in those loan sizes. So then who's getting these deals? And we kind of look at this and we see a lot of construction companies, which really kind of surprised me a little bit, because if you look at the number of businesses and the total number of businesses from 2019 statistics that had 1 employee or greater in the United States was about 11 million people, 11 million businesses. So of those 11 million, and we can break that information out maybe next week a little bit detailed, but I kind of compared slightly with this, and the professional, scientific, and technical services were higher, as they are on actually the number of loans that are approved, but they're being approved for a higher dollar amount, it appears. So little things that you think might stick out a little higher are the accommodations and food services, since entertainment and travel have been impacted so much, entertainment as well. The retail trade is right there being significantly impacted, but it's really going across all borders and boundaries into affecting just about everybody in this particular setup. So if I take that information now and I look at the average size of the deal, that it actually fell from a little over 240 and to 239, it makes complete sense why this is happening. The bigger customers, the banking customers that had the relationships and had a lot of the fee structure and were better customers than we were actually in line to get it first. And actually, in many cases, that might be the truth, but still you had 1 million of the $1,050,000 loans that were made on the small size. So our average deal size is falling, and I think that's really good. What I wanted to do is I wanted to look at an analysis on what the average size of the deal was for a small select range of consultant or clients of the SBDC that I've talked to. And so I reached out to a deli, a restaurant, a bakery, and a brewery. And 3 or 4 compatible businesses. The food businesses, I think, are almost identical. The brewery is a little bit different characteristics, but I decided to lump it as well. What we saw is mostly revenues of about 1.2 to 1.6 on an annual basis for the food establishments. The brewery is a little higher. And then what we did was we looked at the average number of employees they had, of which they were between 12 and 30, with the brewery paying a little bit of a higher cost. Their employees are up from minimum wage plus with brewmasters and things like that. So what I learned that those size of businesses were generally looking at a PPP request of around 100,000. So just a kind of little rule of thumb and a little thing before we get too far going on the PPP. So moving and managing your business forward, where do we want to go with this in this idle or PPP? A number of people, if you qualify for both, the thing that we're recommending, if you get both of those, they cannot be used for the same purpose. Please recall that. So, and since many people are looking to maximize the grant portion, that 75% to payroll, you don't really want to, unless you really essentially need to, use idle for payroll. You want to use it for other expenditures that you might have. So moving forward, we're seeing a lot of people that are even with the smaller idles that are coming in, that are trying to use that for more working capital type needs in the business. That's what it's designed for, is for the shorter term working capital. And then the payroll protection program, hiring the employees back and maximizing would be the next actual grant. So maximizing the grant portion, and this is really something that we did discuss last week and got into. I can see I wasn't able to share. Let me stop my share here and try to get into my Excel spreadsheet, and Zoom is just not letting me do that today. So we will go back to the spreadsheet. So I won't be able to share that example with you. And one of the things I really need to learn on Zoom is when you share and you get those dozen boxes, why doesn't sometimes my spreadsheets pop up? But anyway, that's a question for another day. And if anybody's got a good answer for me, hey, throw it in the chat. I'll gladly read it and fix it for next week. But maximizing the grant portion in the PPP, the most imperative thing that I can tell you right now is that we do not have final rules on this yet. The final rules are due out within 30 days of when the legislation was enacted. And I believe the official date of enactment was March 27th. So we should have something by no later than the 26th of April. And it's really important because there are kind of conflicting things on how to do that. But if you recall from our example last week, what we did is we went in and we looked at a situation to where you had employees and you wanted to get the maximum portion of that. And remember that the PPP rules and regulations are that on the date your loan is funded is your 60 days moving forward. So let's say that's today. It's April 15th. And let's say 60 days from today is June 14th. That is the amount of time during that period that you can actually use to pay the employees and to count toward that calculation. Now, the one thing I don't know is how it's going to be relegated. And I know there are other expenditures, and I know there are a lot of you that are sending in questions saying, what can I do with my employees, or how do I maximize my employees over this period of time? And I understand. Perfect question was somebody from the oil industry who said, we've shut down as part of our negotiation with the rest of the world, and we've shut down all oil producing capabilities. How do I employ and pay somebody? And answer to that is, it's not going to fit every industry. It's not going to fit every situation. It's not going to fit every business. Individually, you need to look on that on a case-by-case basis. Hopefully you have a mentor or an advisor or someone to share. It's an SBDC relationship, or maybe it's an accountant or legal relationship. Maybe it's a friend. Maybe you've got a really smart brother-in-law. But somebody needs to share that advice with you and actually move forward in that regard. So I'm going to take a big punt on the maximizing your grant portion, except the one thing from last week that we talked about before the final rules were out was that in order to meet the definition that I showed last week, you have to bring back almost all of your people. Not quite, but almost. And when we get clarification on what is a full-time equivalent, how many hours, how does it translate with part-time, what happens if you hit 74.9% instead of 75? These are all rules that really need a lot of clarity moving forward to best manage this from a small business perspective. Okay, the other thing that we didn't talk about last week, and And I just realized that in my last example was my sole prop independent contracting example that we'll discuss at the end of this, since I won't be able to use my visual. But moving along, moving the loan aspect, using the loan proceeds for survival. And so that it is, maybe I get $75,000 or $100,000, and 75 of that needs to go for forgiveness. Maybe I'm looking at it and saying, you know, I'm relatively confident my profit margins are going to be stable enough, even though I'm very unsure of the economy, that I'm going to come back to and win. And maybe what I want to try to do is I want to try to use some of that money for survival purposes in order to keep my business going. So again, that's going to be in the final rules. And I have had some individuals contact me saying that's what I really need to do, rather than hire back employees and watch them do very little. And that is just, I just don't have information enough to give you a good ruling on that. But do stay tuned, and we will hopefully have final rules by next Wednesday. And that will be the brunt of next Wednesday if that happens. And maybe even if it doesn't, we can go through various scenarios of anticipating the rules in a couple of days after that. So using the loan proceeds for the PPP for survival purposes is something that we can really do, and is something that might be a possibility given the rules and the final regulations. Every business is different, so remember that. And there might be a hybrid of the two, where you use a significant portion of it. Maybe you use the majority of it, 60%. And so maybe the 60% is actually forgivable in that grant. A couple of things, I want to discuss a little bit some of the rules and regulations on the PPP filing. We did, and this is for sole proprietors, basically self-employed individuals. So you're self-employed that are oftentimes paid on as an independent contractor status on Form 1099. Potentially, I believe it could also be you could be paid on a K1 at the end of the year as your annual statement. It's important that there are a lot of resources that are popping up for self-employed people. Not true during the last. I was self-employed during the last recession, and it wasn't true. There wasn't the net right then. And but it appears that there are, if you can get funding, there are rules and regulations for self-employed individuals. And very clearly, it's using your Schedule C. And even if you haven't filed your 2019, as I mentioned earlier, that I would mention again, 2019, your Schedule C, which is your income from self-employment, you need to have that filled out and accurate. And you can actually submit that even though you haven't submitted it to the IRS. Now, please, I've discussed bank fraud and the consequences of filing two different reports with two different people. It's why the SBA, on all their loan requests, they verify what you send them as tax returns. So please do your best. And if there's a reason why it's inconsistent, please be ready to explain it. But you're going to need your 2019 Schedule C, and it's going to be based on that. And in my example I had, my Schedule C was actually a mom and pop restaurant that actually had no employees. And well, you know, occasionally family would come in for events. They might hire what they would call casual labor. You know, confidentiality is a bliss of the SBDC. So people can tell me anything they want, and I will never tell, except in a general setting like this. So it's out there, it happens, and it's casual employee. So basically, it's a business. It's a sole proprietorship with no business or no employees. Hopefully, they have business, and in this example, they made $60,000. So, in that particular case, you would do the same way that you would treat that like a paycheck. And I'm assuming that's also true with a husband and wife sole proprietorship. But you just treat it like you would and do the same calculations. You take your average it over 2 months, In that case, it would be $5,000 a month. Your 2-month would be $10,000. Your 2.5% indicator or 2-point times indicator would bring you to $25,000. And that would be used as a self-employment, as your self-employment income during that 60 days. Now, there are a lot of conditions that are going to come out of that and some unique situations. We're looking here at the other thing that jointly and ties directly to that, and that's the pandemic unemployment assistance. And thanks to my associate Claudia, a contemporary, for doing this for us. And this is brand new rules that just came out in the last few days as states try to struggle with making self-employed individuals and independent contractors available for unemployment insurance. So as you can see, they are eligible and also can meet some of the disaster unemployment assistance program that has 12 criterias, but also will meet certain objectives along the way. So 39 weeks of benefits, beginning February 2nd through December 31st, and the additional 600 is available. And that is available to self-employed individuals. I know I've heard EDD is very busy and very hard to get a hold of. So, but those things are available toward self-employed individuals as well. So some of the other debt funding programs, we've talked a little bit about SBA Express Bridge loans, where, you know, the lenders can extend up to $25,000. Haven't seen a lot of them. A real popular program and really kind of makes you wish you would have got an SBA loan in the last year or 5 is the SBA debt relief program, which is actually a 6-month term of where SBA actually makes the payment. This was part of the CARES Act. The SBA doesn't really want to see what it saw in 2008 from the financial crisis meltdown and the devastation that it rigged on SBA loans. And they want to get in front of it and offer this 6-month term in order to actually move those forward and keep those and get those back on an unpaid basis. State has some programs. I think some people heard about the governor's announcement that the states, through their iBank, was going to have, I believe, about $50 million available. My understanding is those are most likely to go to entities that will loan out that money. They will have more on that later after we get through this. And there seems to be a groundwell of support for community development financial institutions, or CDFIs, which are nonprofit lenders. And we have a few of those throughout the region. And to try to find more funds for them, who most of the CDFIs, I understand, are not participating as PPP lenders. So we need to look at also equity programs, and we need to look at equity funding programs. And the great thing about equity is you don't pay it back. And in moving into kind of an economy to where it is not going to be as good as it's been, I think locally I saw an economist, one of my favorite economists, Dr. Mark Evans, the emeritus professor of the economics department at CSUB, had mentioned, and I'm going to give you this visual here because it's the best I could do, is he described the V curve about how we were there and we're going to go down to eventually here and bounce back. He doesn't see the V curve working. He sees something more along the lines of not a gun, it's kind of supposed to be a check where you kind of go down and then come back gradually. Really didn't anticipate doing that, but hey, it's fun playing with your hands, I guess. So looking at crowdfunding is really, I think, is really something that our small businesses need to think about. And we've had some success from other businesses that have been funded, but you can work in the equity crowdfunding where you have investors that invest into your business. If you look at my last bullet at the bottom, that's what Airbnb did. They received from venture capitalists about $1 billion just to try to survive this mess. But you can get money from potential investors. It's not probably the greatest investing climate for investors these days, but where there's always opportunity, there's always an investor. So also look at the donation rewards that come to mind there, the GoFundMes, the Kickstarters, and some of the things. Also company pre-sales. Some companies are out there doing very, very good things pre-sale wise, with gift cards and with other things to try to stimulate revenue in anticipation of future sales. And also the marketing aspect from crowdfunding cannot be denied, because when you have somebody who donates or seeks a reward from your crowdfunding campaign, you essentially have a customer for life, and a zealot customer that'll tell many others. Some of the other things to look at as we move forward: strategic partnering. And I'm a real believer in strategic partnering, and in crisis more so than ever. Look at the funding relationships with your vendors and your customers. Why would you do that? Well, if my small business gets 50% of their revenue from one customer, that is one customer I do not want to go away. And if I'm in a position and feel strong enough about their particular business, I'm going to want to partner with them to keep them in business. So there are ways where vendors and customers, and actually others, also can become funding relationships for small businesses. Mentioned a little bit about VC in our example, but private equity firms such as the Central Valley Fund and angel investors and investments like several funds we have, including the Kern Venture Group, are out there as well. And like I say, if there is an opportunity, they will still look at it regardless of the climate. You know, some of your family and friends might not be as hurt and as impacted as you by what's going on. There could be potentially investment from that. And I think we're going to see some unique situations as owners try to look at if they really want to continue or if they want to exit from their particular business. One of the ways to exit is to sell an existing business that has value and has considerable value. So there could be some unique owner-seller carrybacks. There are unique ways to fund those, kind of different. So there's things out there for other funding and other debt and equity funding. We've mentioned this so many times. I'm just going to let you read the first line, and that's look to defer all obligations. Cash flow, and we've been talking about cash flow, about how essential it is and how I cannot stress enough how important it is to manage that. I'd hope to go through a quick demonstration today, but it looks like I'm running out of time anyway. But really look at cash flow and really look at over the next several months of being able to actually start with estimating what your revenues are going to be potentially in April and May. Expand it out once you know more about April to May, June, and maybe July. And then also the expenditures that go with that to try to preserving whatever cash you have. The biggest companies in the world are doing it right now. They are not paying a lot of their obligations. And there's no reason, you know, for you not to take a keen interest in your cash flow and look at it, and also look at your household. There's my forecast, and you know, that's one that's not made out. I had hoped to go to the one that was, but you know, it's a good little tool, Excel. If you want it, again, cash is king. What are the big guys doing? Okay, so major corporations, as we said, were affected. Many of them as dramatic or more dramatic than we have been. So we're looking at potentially 10 to 12 of them today said they would be willing to take the stimulus term from the government. The government offered them $50 billion, but there were strings. And the string involved the US government becoming owners in their airlines. And most of them didn't really like that idea until they started scrambling and looking at a lot of the things that are happening. And a lot of the things that are happening is United and others look to establish credit lines. And so $2.5 billion of which they burned through a considerable sum of that. Airlines also considered pre-sale of miles to credit card companies. What you'll see is you'll see that credit card companies pay airlines a substantial amount of money for airline miles, of which they use to promote back to us small business owners, small businesses, and individuals for our credit card rewards policies. Those transactions oftentimes go into the billions, and they were looking at selling at a discount in order to generate some cash. Automakers, Tesla sent out an email the last couple of days saying, we're not, sorry, but we're not going to be paying our rent moving forward. I'd like to talk to you and have a discussion. Ford has considerable cash and they're kind of in a we'll see mode. I believe that they've accumulated a nice cash allotment and they're looking to actually lay off and furlough as well as Honda and Toyota, which is doing the same and has already announced. Big retail and the banks, big retail, like many of the name brand shopping center mall locations have not paid April rent. And they're basically a who's who of when you go to your local mall and look around. They have not paid their rent, and if maybe they won't for months, who knows? Banks are setting aside large loan loss reserves to accommodate losses that they see coming. Adapt. We need to adapt. We need to create ways to stay effective for as long as we can to try to ride out this storm. It is survival of the fittest right now for small businesses. I wished everybody was going to survive. It's not the case. Look for ways to adapt and look for strategies that will succeed in the short term. The hiring back your newly employees, well, you know, what I'd say is if you don't have an immediate task for them is engage them in some of your strategic planning sessions to learn the direction of where this business is going to go. Write and execute a business plan. Looking ahead, one thing I really think that's important on this is that we need to follow China. Now, when I say follow China, don't take it out of context. I mean that we need to follow what is happening with businesses as they restart from their coronavirus infestation. It doesn't sound right. But anyway, follow China. And if you were at the Shanghai Disneyland, which I don't think many of us were in the last week, you would have found that you needed a number of things to get in. Number one, they would take your temperature upon arrival. You would need on your phone, you would need actually a actual clearance from the government saying that you were coronavirus free. And you would also need a mask. And you would also probably need a little bit of cash. So those are some of the things that we're seeing happening in China as they come back from it. And since they are a few months ahead of us, it gives us just a look ahead of what we can try to anticipate of when we can get through this mess and hopefully get going as soon as possible. Leadership, you know how I am about promoting and communicating your expectations to your leadership team. And really it's a time for leaders to step up. Some of the things we'll be going over in future webinars. A lot of things on resources and managing. And really, I know you're here for the ITIL and the PPP, but come back and let's talk about managing your business. It's going to be the most extraordinary time, most unprecedented, most, I don't know, maybe disastrous times for small businesses. Let's talk about managing and let's move and let's go forward with that. We're going to have great guest speakers, so you don't have to listen to me that much. And lastly, something we mentioned last week, and we just want to remind you, is to be careful from phishing expeditions from those that are actually looking to get your information. As I mentioned, on those of you that wanted an ITIL update, all SBA needs on that is your application number. They don't need any Social Security, employer ID number, or any of your other personal information. And we'll be back next week for round 6. So let's go to the question box. I see we have a lot of questions. Many of you sent some in, and I'm going to try to grab those and answer those first. All I have to do is find them. There we go. Okay. I'm an independent contractor and sole proprietor of a consulting business for 20 years. My major client has laid me off. They chose to, essentially being an independent contractor, they didn't lay you off, they fired you. But that's not in a negative sense. I can't survive on a few hours from them. Do I qualify for the PPP ITIL program? The answer, of course, is yes, you do. You'll use that 2019 Schedule C. We saw that you do qualify for unemployment. And if you are working 4 to 8 weeks, I would imagine that that would be deducted, that amount of pay would be deducted from your unemployment. So yes, good news on those fronts. I've applied for a loan. Do I need to contact my bank that I've applied for? I've applied online and I have an application number. So coming from your bank, I will assume that that's a PPP because your EIDL is actually directly from the SBA. So if you have an application number, I don't think it hurts to check into your bank to see what actually the status is. And if you applied online, it's harder to do that. And it's, you just have to kind of gauge what your level of comfort is in this. Since we've read about banks that have started and have stopped, if your comfort level is to continue and to move on from that, then great. If you feel like, I think there's plenty of clients we've talked to that have put in a second application somewhere else. So it depends on your comfort level, Mary, and how you think. And as far as the second part of your question about what could turn into a grant, tune in next week. We hopefully will know more with the final rules. Kind of answered that question. Let's see the question and answer box here, and we'll start going down. For those of you that are mentioning, is there a recording available later? Yes, shoot me an email. I submitted an EIDL on 4/3. So we were talking about 14, that would be April 17th, April 24th. So you're probably still a few days out from being contacted. The question is, can we apply for an EIDL loan and a PPP? And if we're qualified and approved, can we get both? Yes, you can. You have to demonstrate that you have a need under EIDL, that you have a need for the loss. And actually under PPP, you need to be one of the rules that we've been going over, which include farmers now and self-employed individuals. But yes, you can apply and you can get both. There's some questions coming in about size, about some very large employers, 1 to 10,000 employees. There was some in the hospitality industry, mostly hotels and large food chains, that the 500 employees per location was exempted in that. So that would be about the only case that would show up there. I have a home daycare business and with 0 employees and not filed 2019 taxes yet. Which loan should I apply for? With 0 employees, you could apply for both. The EIDL probably, from what we've learned, is not really working well with 0 employees. But as a self-employed individual, you can, once you get your 2019 taxes done on your Schedule C, whatever your income is, you can roughly take 5% of that and actually use that for expenses in your household. And thank you for providing childcare, a very necessary service for what we do and what we have. On the EIDL, do we have to put up collateral of the business or personal assets, meaning our home? That is a great question, and we've heard a little bit of both. And I would assume on larger EIDLs that we've been talking about that are coming back, as far as today, we've seen a couple for $500,000. I would believe that there would be collateral involved in those. On some of the earlier programs, I think that we had information on collateral of EIDL if you received an EIDL loan over $20,000. Now, these rules and regulations are being adapted, and they're for different periods of time of this disaster. So they are meaning to change, but I would think that the government would definitely have a collateral or have a security interest on large EIDL loans. Do you know that if we got the $10,000 advance, we received our $10,000 advance, does that mean we get approved for an EIDL loan? And the correct answer for that is no. You can actually receive the $10,000 EIDL advance that you would not have to repay but not necessarily be approved for a larger idle loan. How do you determine your loan amount for idle? Actually, the SBA gets to do that for you. And it is basically, if I can kind of pull from previous disasters that we'd seen, it basically looks at your working capital needs for that period of time. So whatever the period of time is right now, what they're looking at, is it 60 days or 90 days or 120 days, whatever. It's your working capital needs. It's the money that you need to keep your business afloat. It's not to make you whole. Again, idle is not an insurance policy based on what you're missing out on and what you're losing. It's just a program to provide vital working capital for your business while you navigate your way through the crisis. Sally asked, do they ask for proof of credit not available elsewhere? You know, I think it's, that's a good question. And typically, from what I've read, is I do not believe, at least on one of the two programs that they do, on the PPP, I do not believe it is a question. On the idle, it could be. Do I know the FICO score on the idle? I know it was touted early on as being somewhere in the 650 to 680 range, and then I heard it was reduced to try to get more money out to borrowers. Not really sure right now. Our local lender is requiring a personal guarantee on the PPP loan. I believe that is not a requirement from SBA. I didn't see guarantee as being unnecessary, but lenders can actually add other things. So the personal guarantee on the PPP is, I think, a little bit, I don't believe I've seen that. But what it does is it gives me plenty of motivation to hire back 75% of my workforce, meet that requirement, and have the entire thing then forgiven later on down the road. Have a question. I have a relationship with Chase, a credit union, and PayPal. Should I apply through all three or just one? You know, it depends on your relationship with Chase, if I would apply through them, and also if they're still looking at lending banking relationships and what their banking relationships are. The credit union is someone I would maybe talk to for sure. And also PayPal, since I believe you are a self-employed individual. I probably would not apply through all three. I could possibly, if it was me, I might apply for two, even though I might tell you to apply for one. That's just how it works around here. Let's see, I had 8 employees at the end of January. It's doubtful I can get them back within 2 months, just because customer activity might not be up to a level then. That is a very common issue that is coming up. And it is something that you just have to look inside your particular business and industry and see, is potentially there's something that you can do? Is there some type of service? You know, some people offer, some people in the construction industry offer a checkup, like a checkup that can be done very minimally. And maybe that stimulates more demand of where they can go out for $19 and maybe install a new HVAC filter or something. So maybe you're not making a lot of money off of that, but maybe there's other work that's generated from that and other activities. So again, it kind of dovetails back into the marketing aspect. And I think it's a common problem that everybody's going to have based on our businesses are not open yet. And we're starting the clock right now for some of us on that 60-day window. Can you use your PPP to pay rent in advance? You could perhaps. I would think that it would probably, to be safe, I would recommend probably just that 60-day period. Maybe that'll come out in the final rules. But I would think that you might be able to negotiate something outside of that with your landlord. It's like, you know, if I can pay rent for a couple of months here, can I get a couple of months free down the road? Something like that. I mean, negotiations are what should be going on all the time now. Another question. And again, if you want slides, just put that in the chat box for now. If you want the slides or the recording of the presentation, if you want the cash flow forecast we showed earlier, all those can be made available. Throw them in the chat for now. I see that we've ran along now 2 weeks in a row. So I'm going to answer 5 more minutes of questions and then do my best to get out of here. So on the SBA debt relief, with SBA making the payment, I can only find where they're offering a deferment, not paying for it. Can you clarify? And I believe not. The final rules are out on this, but there are rules on SBA relief. It was in the CARES Act, so if you can research something from the CARES Act, in the CARES Act, there was an additional $17 billion that was for SBA relief. And the SBA relief was for actually making the payment for 6 months. Now, there could be some timing issue on that because I've heard conflicting things. I've heard that the 6 month is automatic and that you don't even need to contact the SBA or your lender. I have heard also that some individuals went directly to their lender right when this happened and received a deferment. And I've heard a conflicting report that after that first month of that deferment, then the additional 5 months of the payment can kick in. But I don't have, you know, maybe when we have Keith Bryce back, who is an SBA 504 lender, we can get that answered and we can clarify some of those. But it is out there. It is 6 months. It's in the CARES Act and it is happening. Are these webinars always during the lunchtime? Well, we try. It's my way of dieting. You know, I lose a lot of calories here and you guys give me a little bit of stress. So yes, usually the webinars have been going back since January of 2013. Those that have been on a long time know that we started them at 12:05, but we moved it up 5 minutes because of the crisis. Do you know about business interruption loans? Who issues these and what are the terms? You know, there's business interruption insurance that are through insurers, but business interruption insurance has a number of conditions, of which we've learned that pandemic viruses are one of those that preempt the insurance companies from having to pay. I'm curious to see how many people could not apply to PPP versus those that were eligible. Is that question asked? Maybe we'll throw that one in the poll next time. Or maybe I'll just get another question and stump you like my Merle Haggard question. I am eligible, but we can't seem to apply to anyone. Been working on FinTech, my bank, local banks. Keep trying and keep looking at all those FinTech and some of the local banks. And one of the things that we're going to see is we're going to see that once the maximum limit is reached by banks and actually the Fed is able to come in and buy those loans and take them off their books, takes them right off their balance sheet, many of these banks that have maybe slowed down again will get back into the game. But Adrian, email me with that if you're still having a problem finding a bank, and we will look and continue to try to see if there's one in your particular area. Okay, well, that's it. That's it. We're near 1:15. Thank you those that stuck around, and thank you for another fun webinar. And next week, we'll be back for whatever's hot on the 22nd of April. Keep out there, keep looking, keep thinking of ways to improve your business moving forward, even if it's not open. And we're going to continue to hit on that and more tips for you as you become closer to that opening date. So again, I'm Kelly Bearden, and we're done for today. So have a great day, and we'll see you next week. Goodbye, everyone.